Well, good evening everyone. Welcome to this Market Outlook 15th March 2023. Been a little while, just waiting for things to further develop, and we're at a very interesting point in the markets now, because wave 3 at any moment could begin, and from what I'm seeing it could have just started to begin now. Yes, remember, we're in big wave, intermediate wave 3 in the stock market, and within that wave 3 you have 5 waves down of smaller degree and so forth. So as we always do, we'll start here with gold. Now gold's recently rallied from the 9th of March, and we got to our projected pullback area and beyond. We then came back down, retested into 1828 and lower in the 1800s, before then ABC pullback. So I'm expecting at this point in gold, if this previous swing high does not break, this current price action does not break this previous swing high, the trend still is bearish, and that's what I'm sort of looking at, considering the market environment in wave 3, because wave 3 is the strongest wave, so there'll be a lot of momentum to the downside, and if there's a lot of selling in the stock market, it can have a ripple effect through pretty much all asset classes. So if the big indexes fall, S&P, Dow Jones, Nasdaq, etc., and they're all trending that way so far, Russell's leading at the moment, and we'll touch on that, but gold, silver, bonds, pretty much everything will sell off, and as they say, cash is king. So expecting gold, we had a bearish day yesterday after this 3-day pullback, and telltale sign will be tomorrow. Did we break that? If we fail, that could be the next swing high, being a lower high than the previous one. Yes, it's a pretty deep pullback, we were looking at that, and when we draw it, didn't quite get to 0.786 Fibonacci. So expecting gold to, it's already looking like it's stalling, expecting that to roll over, and then targets. Well, be obviously watching this previous swing low, break of that, one step at a time, as I always say, but I suspect this 1600 level we made back end of last year, that'll be broken, and gold can come down as low as the 1400s and lower in the coming months. Now silver. Silver's much the same. We had this pullback that we were looking for, 246 rather, and we pulled back deeper than the target area I had marked in. We consolidated here for some time, then we started to sell off, and we've made a lower low here to this previous low. So once again, watch this previous high that's just been made yesterday. This is a potential swing, and if it is, be looking for this to continue selling off, or start selling off again, and break down into 1884, and longer term like gold, breaking this low we made end of last year in September. Now, as I've said a few times, gold and silver, sometimes there can be a non-confirmation between the two, so they do tend to move together. And you know, you see here 14th of December, 2nd of Feb, go back to gold, 14th of December, no, 2nd of Feb, we rallied in gold, but we moved sideways in silver. We made this high on the 2nd of Feb in silver, and we actually made a high too in gold on the 2nd of Feb. So even though that price action here does not match exactly the same, that part, the high for this pullback was on February the 2nd. So both silver and gold are on to roll over, break these previous lows longer term, coming 3-6 months, which, we have a big sell-off that can happen pretty quick. Oil's now almost into our target region that we've been watching for many months now. We came down, we repelled, as you would see. That's normal, because after a significant move lower, the buyers come back in because it's not balanced anymore. There's too much sellers compared to buyers, so it's too pessimistic, so then the buyers come in, drive it up, but we're seeing this momentum continue lower now. So I'm still expecting oil to come into this area at $0.565. Been watching for many months, and we've almost nailed the call there, then closer and closer, and possibly lower into the 50s for turning around, and then oil could then continue bullish, but that's long term. Now DXY, dollar index. Now on this we're looking for this to continue higher, but we've pulled back deeper into 109.08, a little bit lower, and then had a bounce, made a higher high here at this previous high, but it's a bit hard to see at this point what's happening. Yes, it's still, this last few years bullish, but shorter term it's bearish. So, same thing, previous swing high here. If it breaks here, then we're continuing higher. If we break this floor, then we're going to go lower. So it's looking today that we're up 0.76, which you'd expect because the stock market's down, the futures are down minus 0.178, volatility's up, so money flows into the dollar. I'm actually looking for this to continue higher. My bias at the moment. I think this pullback's over now, and if we go to the euro, which is pretty much the inverse or much the same, you can see here euro's selling off, so I guess you can use them to confirm each other, a bit like gold and silver. If we break this previous swing, that's my first sort of confirmation point, breaking 104.830 and then lower. The dollar goes on a rampage. I would expect longer term for euro to break 95.6, and I'd expect the dollar to break possibly this previous high in September. And was the high here, the low rather, say 28. So longer term that would mean the euro comes back into 95 and possibly lower. Now yields have sold off pretty heavily the last few days. Now there was a bit of a scare in the US with some of their banks, and that made investors flee to what they call safe assets, gold, and silver, and of course bonds. Now we'll go to TLT after this, but I'm still looking at yields to continue higher long term, and we haven't, yes, while we've pulled back pretty aggressively the past few days, we've still made a bit of a floor here, the 3.7% yield range, and I'd be watching this swing before I start changing my mind shorter term in terms of money flowing into bonds. What do you expect? Money leaving bonds because everyone needs cash to pay debts, because things are getting liquidated and people are withdrawing money and deposits. This is the whole the fractional reserve banking system. We all have money in the bank, but the bank actually doesn't hold all of our money. They only hold a certain percentage. What happens if you all while people get fearful, it's a ripple effect like dominoes. Everyone lines up, and that's what's happening in the US last week, to withdraw their money, and it gets to the point where the bank has to say, no, we don't have enough money to give you all, so no more withdrawals. And the panic just creates more panic, and that is human nature. Same with the opposite, exuberance, adulation, excitement, making lots of money also affects people to think that they're also going to make money, so everyone jumps on the train. So it works both ways. So yields looking for this to turn around and continue higher, longer term, shorter term, possibly a bit lower before turning around. Much the same in the 30-year and the 2-year. Now, Dow Jones. Dow Jones, we were waiting for this pullback last video, and then we've still sort of completed a bit of a consolidation, bit of a range sideways. But most important thing to remember, people were jumping in, yep, that's it, the bear market's over, if it was a bear market. Because really, that part was almost the technical definition. 22%, consider 20%. Remember a bear market. Then we've pulled back quite aggressively, make a higher high here. Sucks in, a lot of people think, yep, we'll be having new highs by year end, but sell off, made a lower high here, and again we can't break through this area here. So as long as that holds, I'm looking for this to continue to the short side, and I think we're going to pick up a lot of momentum here very soon, if not tonight and the coming week or two. Looking for Dow Jones to break this low in October, come into 25,000 in the coming months. Excuse me. And you can see after we sort of made this consolidation, we came up pretty bearish sort of candle here after a bit of buying volume. Pretty significant bearish candle here, pause and then continue. So look, we've had to pull back, we gapped high yesterday, looking for this to roll over, continue lower. S&P much the same, they will pretty much mirror each other at this point. Russell's leading, we'll get to that soon, but same in the S&P, looking for to come down into 3,200 and lower. Nasdaq, now we've already breached 0.618, so this into 9,000. Tech has been leading the charge, but like all of them, I'd be watching this swing high. It's my first sort of invalidation level. If we break, then yeah, we could go up high before eventually rolling over, but it's looking like we're going to sell off very soon. Russell, see that? Almost here, broken this low in December, whereas we haven't broken it here in the Nasdaq. Excuse me, haven't been well. December here in the S&P and Dow Jones we have broken. So Dow and Russell have broken their December lows. Nasdaq, S&P haven't yet. Long bond, of course, money flowing out of bonds. You'd expect this to rally higher. It's the inverse to the yield. As futures as stated, you can see it's pretty bearish for the day. So far, we haven't even opened. Volatility is up 14%. So expect stock market sells off, volatility will rapidly rise, and apparently a lot of people have been trading, next day expiry options, which is pretty mad. But it gives you a good idea of the sort of market environment we're still in. Yes, people might say they're bearish, but what are their actual positioning like? People I think are still overall very bullish, and until that's subsided, the norm, I see that we'll continue selling off in the next months, possibly year or so. Excuse me. Bitcoin quickly. Bitcoin had a bit of a tear, but I think if the stock market sells off, this will sell off too. Ethereum the same. XRP and all the other cryptos much the same as well. I bought a bit of XRP the other day. But yeah, that's about it. So look, as I've been saying for many months now, yes, there's a chance, yep, still some money to be made, but you know, after the last 10-13 years, especially since 2020 to now, we're in massive growth. It's not sustainable. There's record levels of debt. People are leveraged through the absolute roof. Everyone's still bullish. Here in Australia, everyone still loves property, even though it's dropped a few percent. You know, as soon as it drops, there's a article that comes out saying, oh yeah, it's over now, prices will rise. Like, everyone's obsessed with rising prices all the time. And that's why a bear market of this sort of magnitude will flush all that mentality out, because it's unsustainable, it's not healthy for a market, and economics and how a market should work up and down. It's been engineered for so long to stay up, but it only lasts for so long, and now we're getting record levels of inflation. Central banks need to continue rising interest rates. They've risen. Excuse me. The central bank here in Australia has aggressively increased the interest rate, and most other central banks have too. A lot of people, middle class, lower class, like, oh, what are you doing? It's not sustainable, help me, I'm struggling. So there's pressure. There's always pressure from the society, because at the end of the day, they're the ones that vote, and politicians want to stay in power. If it's getting too like oi oi oi, the central bank can then, the influence of the government, turn around. However, the central banks don't control the markets. That's not how it works. The market is its own living organism, and it will follow where it needs to go. Central banks always tend to react later, and now excessive, I guess, liquidity injected in the system during those times of 2020 are catching up to us now, and here we have record levels of inflation because it wasn't produced through productivity, through people working, through supply demand. It was actually, an exchange between the government and the Treasury, where the Treasury issues currency in return to buy government bonds. And it's a mechanism they've been using for years now. So, I think this is a turning point tonight. I think this definitely, we have seen the early stages of wave 3. The fear and greed indicator too, actually, while I'll get there. Something interesting. I've been tracking this. We're now down into 22, and let me bring it up. Actually, I won't do that, I'll do that in another video, but basically we've gone up from here, extreme greed, down here in the last couple of weeks. I'm surprised we're still here after the last day or two's rally, but this can go further before we have a pullback again. So stay safe, be measured, be poised. Cash is king. Save as much as you can, because at the bottom it's going to be a great buying opportunity. Anyway, that's all from me, guys. Enjoy, take care, all the best.